What's up, traders? So we just completed this trade here, 40% gain on SPY short, and I've already got so many questions on the trade because it wasn't something that was really based off of the watch list, but did come from the watch list rules that I teach. So it took a little bit of trader adjustment and ingenuity, I suppose, within the trade to be able to manage this position and make it work. And I'm going to explain to you exactly what I mean. So here's the alert room. Of course, I'm calling out the signals and all of that good stuff. But we're going to start with the day trade watch list. So right off the watch list, SPY was a long idea above $447. We're on the. I'm going to move this to the 5-minute time frame for SPY. And we'll draw a trend line right here at $447. Now, right off the bat, you notice all of this consolidation, right? None of these 5-minute candles are closing above $447. I'm going to move it to the 1-minute time frame to kind of pinpoint the entry. So seeing all of this consolidation, because you don't see the drops like this on the 5-minute, right? Seeing all of this consolidation here and all of this multiple rejection there, when we got the drop, the larger drop down off of 447, not for the first time, but for the second time, I thought that this was going to continue lower because it did not hold, right? If we drew a trend line here, it did not hold this lowest low as a point of support and actually created a new lower low. So I went short right here on this minute, 9:52 a.m. So we're going to go to the alert room and just timestamp this. And this was on forward, so we'll slide this down. And I actually had a long idea on SPY, right? I said get ready to take it long earlier on, and then I said cancel that, 9:43, get ready to take it short. That's how fast things can change. So 9:52 a.m., right? Time stamped. 9:52 took entry SPY short. I give you the exact contracts. I give you the exact stop loss. I give you the exact fill price. I said I have room to add because I was thinking it is chop, right? Maybe it does push up. I kind of took the bottom tick entry right here. So I left room to add because I knew it was chopping, but I also knew it was rejecting. So I left room to add in case it did push back up, and that's exactly what it did, but we'll get to that in a second. I have room to add if we press a little higher, but I'm not looking to add to this on a break of 447. That is the hard stop. The reason why that's the hard stop is because it's the hard resistance, not only based off of the day trade watch list trigger level, but also based off of the intraday price action. We see all of this rejecting 447. Obviously, if it reclaimed 447, we don't want to be adding to the losing position. So there's a difference between adding to a losing position versus planning a trade that you're looking to scale in on. So we get the breakdown from 447, take the initial entry here, 952. I'm telling you, I have room to add because we are in chop. We do get the move a little lower. I don't think we're up 10% at this time, so it's not enough to really take profits on. And then we get the rally back up to 447, which we knew was possible. I've already told you that was possible, right? And some traders cut the position here. They didn't trust it, and that's okay. But look, if you're taking the positions and you're following me, I would recommend that you try to trade. If you are following me, try to trade along with me because the way that I'm taking my entries is very specific. And if you're taking your entries in a different way and you're trying to still follow my plan, it's not going to work, right? So like, for example, if I say I'm entering here and I have room to add, but then you enter here and you don't leave yourself any capital to add later, like you're already at full position size, you're not going to get the opportunity to add up here when I do, and you're not going to be able to lower your cost basis, and you're not going to be able to profit the way that I do. You see what I'm saying? So you're more likely to cut on this rally rather than add into it. And that's the difference between my plan and trading the way that I'm trading versus having your own way of trading, but then still trying to follow my plan. So I'm hoping that that makes sense. You can't really mesh the two differing strategies. So we get the rally up to 447. Now notice here, I'm not adding into the green, right? I'm waiting because I'm actually thinking I might cut this position, and we get another rejection candle at 447. So it's not until we get the rejection, not until we get the confirmation that I then add into the position, and that's right at 10 a.m. Eastern. So we'll slide down here. I said, perfect timestamp, 10 a.m. Added once to SPY short. I move my stop loss to high of day. My new average is 114. You don't have to follow. So it's just the same contracts, right? Now, why would I move my stop loss? Well, because my average has moved up. So if I took my initial position here and then I added the position here, my cost basis is no longer down here. My cost basis is more so, somewhere in the middle, somewhere like right here, right? So actually at this time, after I add, I'm then only down like, I think 7% on the position, which is still below my stop loss of 10%. And because my cost basis has moved up, then I can afford to move my stop loss up. So I'm giving the trade a bit more room to work because I have effectively lowered my cost basis. So the stop loss is now here. My new average is now somewhere in the middle here, right? And my two entries are there and there. And from here, it's just trade management. Okay, just trade management. So 447 rejection. It's going to be watch list rule number 4. So instead of a long idea above 447, we're now taking it short off of 447 with the stop loss at 447. You see how we're adjusting due to the intraday price action as a trader. Like, you have to be intuitive with this stuff. So we get the move down towards the low of day area at the PDC. I think here we're up 10%, and I believe I'm just kind of walking you through the trade here. I said 1003. Yeah, so that's actually going to be right here on this candle. 1003, we're now up 10%. You can take your profits or hold. That's up to you. Now up 15%, 20%, 25%, 30%. I'm screenshotting this along the way. That's called trading the chart, not the PNL. Trading the chart, not the PNL. So many traders make this mistake where they want to trade their PNL and not what they see on the chart. So if I'm taking the initial starter entry here, and I understand that there's room for this stock to go against me up to 447, as long as I'm trading based off of the chart, based off of 447, and not trading based off of being down 10, 15, or 20%, I'm fine in this position. I'm not panicking in this position because I've mitigated risk by entering with a starter size, small enough position size to allow the trade to go against me. 2, I'm trading the chart, so I know that there's resistance at 447. Maybe it rejects. 3, I know that I have afforded myself the ability to lower my cost basis by averaging into the trade if we get a rejection of 447. So this whole time that this is running against me and I am down on my starter position 10, 15, 20% on the way up, whatever it was, I wasn't really checking. I'm not panicked because I'm trading the chart. I know my plan. I know that there's 447 resistance. I know I can add, right? And I saw some of you cut on the way up, and I don't know if that was like a panic cut or if you did enter with full size, if you didn't allow yourself to have enough capital to add into the position later, or maybe you just didn't trust the analysis. I don't know what it was, but you have to look back at your own trades. If you followed me into this one, look back at your own trades and figure out why you made the decision that you made whenever you cut the trade, if you cut the trade on the way up. That's called trading the chart, not the P&L. Stop loss set at 446. So as soon as we break the PDC right here, now I'm just trail stopping it, right? So I'm already up. We're already up at this time, what we say, 30%. 35%. There's no reason to let this come back on me to break even. So I'm just holding stop loss set at 446. And then I think I just went ahead and tightened it up, holding runner. So it took some profits along the way. 38% move stop to 145. Now a 40% gain, move stop to 150. And now I'm trading the P&L, right? Just moving the stop loss up really tight so that if we do get a slight reversal like we saw right here or here, just go ahead and take me out of the position, because a 40 or 50 or 30, 40, even a 50% gain, yeah, it's all nice. Anything over 20%, anything over even 10% is pretty good. Typically, I aim for a 20% gain, but I really liked the setup on this one, and I thought that, yeah, if we break this PDC, there's room for it to fall further. And sure enough, it did, right? I didn't bottom tick this by any means, but I definitely caught the majority of this move down. So well done. I wanted to explain that trade to everybody. There was also another question that came in regarding the Ford trade, which we took long on a break of 1275 for the run up into the high of day. And someone asked me, Gates, by the time that you told me that you were taking the position, the contract price was already up a little bit, and I took the position after the contract price had ran up. Basically, they chased the move, and I wound up taking a loss, or would have normally taken a loss on this trade. I think they were paper trading, but said I normally would have had to take a loss on this trade because I wasn't offered enough profit margin up top. So let me walk you through the Ford trade and kind of a way to combat that. So right off the day trade watch list, this is always where we start. Ford right here, long idea over 1275, which is 1275. We've already got our trend line drawn there. Now, my alert did not come out until 9:35 a.m. 9:35 a.m. So we don't trade in the first 5 minutes. 1, 2, 3, 4, 5. We do not trade in the first 5 minutes, right? Let that 5 minute pass us by. But what we see here in the first 5 minutes is a break of the trigger level, a push into high of day, a pullback to retest the trigger level, a bounce off the trigger level, which is forming what? A little mini bull flag, right? And then the press higher. And then this is when my alert comes out. Hey, we're taking Ford long, and we get the run up into the high of day, and we wound up taking 20% profit on this. Where this particular trader, I think, made their mistake was rather than entering long on this candle, they probably entered long on this candle or at the high of day, or even at the top of this candle. I don't know exactly where they got their entry, but it definitely wasn't here. So how can you correct that? Well, I told the trader that they're waiting for a signal. So that's mistake number one. They're waiting for me to tell them that they need to enter the trade before they enter the trade. So mistake number one, right off the bat, you're waiting for a signal. While I do give signals, what I do within the Discord server, we are not a signal server. I teach you my streamlined system of how to trade, right? So while I do give signals, I don't classify myself as a signal server because I do much more than that. It's much more valuable to teach you the strategy rather than just give you 1 or 2 trades that may or may not. Or I know Discord servers out there that give 20 trades per day, and then maybe 5 of them hit, and they cherry pick those 5 that hit and act like all they do is take wins, right? It's just unrealistic, and it's a little disingenuous. So the more valuable content comes from teaching you the strategy rather than just giving you signals. So that's mistake number one. This trader was waiting for a signal to come from me before they took their entry. Number two, they're too slow. They're not prepared. We already know, based off of the day trade watch list, that Ford is a long idea above 1275. So the moment Ford breaks 1275, what should you be doing? Prepping to take it long. Go ahead and pick your contracts, right? Pick your contracts, load them into the active trader, select your contracts. That way, all that you have to do is press buy. And it's a bit of a process, right? You have to go to the trade tab. You have to type in Ford. You've got to go through all the different contracts, pick the ones that you like, copy the code, paste it into the code in the active trader, and then press buy. That's a whole process. And we know every second counts. So the second mistake is that this trader was just too slow. They didn't have the contracts loaded. And if you're wondering, well, Gates, what contracts do I pick? How do I know what contracts to choose? Listen to the podcast episodes. I made a full episode number 7 of my podcast episode, Choosing the Right Options Contracts. This gives you everything that you need to know for how to select your contracts to day trade, what I consider the ideal contracts to day trade. So mistake 1, waiting for the signal. Mistake 2, not being prepared, not being fast enough, not loading the contracts, because had that trader just loaded the contracts and then you see my signal come out in the alert room, we got to scroll up because this was before the SPY trade. Then you see, I give you, right, Ford load this long, and then the same minute Ford took entry. Then you see my signal come out after you've already recognized that the stock is breaking the trigger level, and after you've already loaded your contracts. You see this come out. All you got to do is press buy. Boom. Now you're in, right? Hopefully you get the same fill price as me or pretty close fill price to me. And it's literally 1 minute later, we're up 17%. So the difference between my entry and 1 minute later, maybe this trader's entry, is a 17% profit difference. So you see how speed and preparation is paramount. It makes a difference. You've got to be prepared for this stuff. You've got to have situational awareness, because this trader had 1, 2, 3, 4, 5 minutes here of Ford trading above the trigger level to prepare to take this trade. but they didn't do anything until they saw the signal come out. Then they're doing all of that, and then they're getting the high entry. Like that's on them. You're too slow. Got to be a little faster. Okay, press the like button for me, by the way, if you haven't done so already. I hope that the video has helped you out and explained a little bit about the trade today, how to manage the trade based on the intraday price action, trading the chart, not the PNL, and also how to prepare yourself to trade a little better, be a little faster, be a little more efficient. Subscribe to the channel if you haven't done so already. Thank you for your time. And again, press that like button for me. It's the best way to support this type of work that I do. And I will see you in chat. Take care.